One Piece is crashing, Pokemon is up, Dragon Ball is the new king in town. There's a lot of emotion right now that's going on social media, so we'll dive in today, take a look at some of the terminology, and kind of figure out what is going on in the market right now and how can we best think about this from terms of investment and also in the shorter term for those people playing it from that perspective. So I think at the moment, like where we are is, you have to appreciate from a trading perspective, from an investment perspective, people are highly emotional. They're very emotionally charged. And the TCG space is no different to the financial space in that regard. So, what we have at the moment is we have one piece that on some cards is starting to correct. Okay, so we see mangas starting to come down off the highs. But at the same time, we also see cereals and we see grails like Roger actually increase in value. So, what we're seeing there is a separation in terms of those bigger cards are continuing to see price increases, but the mangas are starting to correct. And there's a number of reasons for that. If we take out the emotion and all of this, basically bullshit that people are talking about when it comes to One Piece is crashing and One Piece has kind of, got a problem and it's a bubble. And we'll come on to those terms slightly later on. But the reality of what we're faced with right now is that we have one of the kind of the initial jump in points for One Piece, which is mangas, a very easy to determine set, a very easy to collect set, something that for people moving into the space, it usually becomes a first purchase. We're seeing that section of cards start to correct. I think that's perfectly natural given that One Piece has been on a huge tear for the last 2 months and that we're going to see some sort of correction and natural pulling back in the pricing because of that. And so at the moment, like I said at the start, the market is super emotional about all of this. It's talking about like crashes and bubbles, but you've got a market that ripped multiples over the course of 3 months that is now experiencing a perfectly healthy correction on a small subsection of cards. So this is absolutely in no way some sort of crash. It is in line with what we would expect from a market that has achieved so much upside in such a limited amount of time. And that really brings us on to the emotion, and the emotion of investing in general, not only in the TCG space, but those areas are, perfectly linked and correlated, especially in terms of the psychology that we experience in those markets. And what you see on the social side of things is you see people talking about the One Piece bubble or the One Piece crash. And it's really just emotive language to get you to respond to something, a little bit like how I open this video. And I'm not the sort of person that's going to sit here and do all of the clickbait stuff for you to get you to watch this content. My view is that education is the best source of you coming back and enjoying what I produce here. But this emotive language that is used all the time on social media is the thing that really kind of hooks people in. So when you use these dramatic terms like crashing and when you use bubble, it gets attention, it gets likes, it gets comments, it gets shares. So really, you have to understand that that is what is going on at the core of this. It is a way of amplifying views on something by using those highly emotive terms that investors and traders are obviously regularly feeling in terms of emotions. So the One Piece side of things is fine at the moment. It's absolutely fine. It's perfectly normal what we're experiencing on the One Piece side of things. And my view is I just want to buy more. We really have to think here in terms of the way that we're viewing these markets when we're thinking about the horizons for investments. And it's something that I covered off in the first video. When we're talking about horizons for investments and what you're choosing to do with your money, it's very, very important that you have that set out in advance and that you have a plan. Now, I am somebody that I cannot split attention across multiple markets. That's my weakness or my strength, whatever, but I cannot split attention across multiple markets. So I cannot perform well investing in one piece if I'm also trying to piggyback onto things like the Dragon Ball momentum that's currently taking place at the moment. Because I feel as though within these markets, there are far more experienced participants than me. And there are people who are far better positioned on those markets than I am. And by me trying to jump in and abandoning ship or reducing exposure to one area, just leaves me then playing catch up at some point in the future. So those time frames and those thoughts that we have around how long am I holding this for, what period of time am I looking at investing for, is very, very important. Because for me right now on One Piece and being heavily focused on One Piece, what I'm looking forward to is OP17. Now, OP17 is way on in the year. Okay, we're talking like November in the year. But that for me is something that I want to be planning for now. I want to be making those plans through the summer, and I want to make sure that I am perfectly positioned to be able to take advantage of what I will believe will be a very, very good period for One Piece in OP17 launch. So whatever happens from now until then is largely irrelevant to me in terms of pricing, except for providing better opportunities should I wish to position for certain areas. So that is my personal view. So when we're thinking about timeframes and we're thinking about all these emotive terms that are being used, it really comes down to you individually, and you individually understanding what your investment criteria is, not listening to the market when it's using those emotive terms to try and scare you into action of certain things, and instead just thinking rationally about what's gone on and what I've laid out in terms of at least One Piece for what we've seen through right here. And when we take a look at the index on Card Ladder here, and we take a look at One Piece, which is hidden now somewhere in this because I did this earlier, and here it is. What we're seeing here is, in terms of like sales volume, and what we're seeing is, something that is doing still absolutely fine. That 15% that we covered the other day, we're still 15% off the high. It's largely irrelevant in terms of what we're seeing. And when you compare that to other sides of things, and you compare that to things like Pokemon has also started to flatten out across the highs. Like, perfectly fine. It's a perfectly normal thing. Sales data on Pokemon is also declined, and we thought that that might be the case over the course of the weekend anyway. But we're starting to see some of the sales data come down a little bit. Absolutely fine. We don't need to be using these big terms like crashing and, everything else to try and determine what's going on here. And I can speak as a reseller, and I can speak as somebody who operates in this market. One of the things that I did over the course of the last sort of 12 months of looking back at my personal data and performance is I started taking a look at what happened when it came to selling items. So if I basically sold each of my items 1 month later than I did actually sell them, and this was prompted by a friend who asked me to take a look at this and think about this. If I sold my items 1 month later than I did actually sell them, the profit potential increase was ridiculous, like eye-watering, nausea-inducing, don't want to look at it, that sort of number. And when it comes to when we're thinking about these markets, everybody gets very caught up in the short term. And we see that when markets start to move, like when One Piece started to move and everybody jumped across to One Piece. You have that resilience at the start where you don't want to admit it might be something. And then a couple of weeks later, you find yourself dabbling in it anyway. And the same that we're seeing now on the Dragon Ball side of things. We're starting to see people who are hopping across to Dragon Ball to catch that wave. And that is a very short-term focus. And there's nothing wrong with that as long as you're happy to engage in those market conditions. They can still be very lucrative for you, and you can still make a ton of money by doing that. But you need to be in the right frame of mind and the right person to be doing that, because if you buy too late, you can get caught in an awkward position. But we know that the collectible space is basically infinite upside at the moment. It is just continually printed fresh highs. Sure, there are periods of time in which consolidation will be longer for you. It may be more boring in the space. It may take you longer to be able to move some of those cards. But every single card, when you look back, you probably could sell for higher today than you did at the time that you sold it. And so it really brings in, again, that question of time horizons and thinking about your own personal investment structure and what that looks like. And for me, it's been something that this year, one of the promises that I've made to myself in terms of the business side is slowing down the rate of selling. So I've largely been kind of sitting back and not looking to sell as frequently, because I know that the profit actually just extrapolates out if I continue to hold that product for longer. And so for right now, I think that's a really important thing to take stock of and to take note of as well, especially in an environment where we're starting to kind of, hear all of this wording around certain CCGs in the space. Right now, though, Pokemon, Very, very strong. So Pokemon, really strong market at the moment. Those 30th anniversary discussions, news, announcements, Super Bowl ad last night, really starting to kind of kick into mind share overall. And it, at the moment, continues to push Pokemon higher. And where we're really seeing the bigger gains on the Pokemon side is once again at the larger side of the cards, as we have done with One Piece. So some of those bigger cards moving higher. And one piece of advice that I give for people in general is if you can purchase one bigger card instead of 5 to 10 smaller cards, typically that is always your best option. The larger purchases, the lower population purchases, the more desirable purchases typically have more resilience on the downside, and they usually produce outsized gains to the upside. So my advice is always stick on the kind of, if you're looking at investing a certain amount into CCGs, then making sure that you're doing so on as few items as possible instead of deciding that you want to kind of blanket coverage with 20 slabs, 30 booster boxes, and splitting things out really, really wide. Within this space, you typically don't actually need to diversify that much. You just need to have kind of a target area. And the higher end of things has always been the biggest mover, the biggest earner in that regard. And Pokemon at the moment is really demonstrating that perfectly because some of these big cards, some of the vintage big cards, the lower pop cards are moving really, really well. We see things like ponchos continually make fresh highs, an area of the market that many people will know me for as well previously. It's an area of such high conviction for me in terms of where we see some of the most significant growth for a little bit like the mangas, a very easy to collect set, a set that keeps people coming back to add to and to continue to build until they have the full lineup. It's just a very easy to manage, lowish population set that also every Pokemon TCG fan knows about. Everybody knows the ponchos. And so again, very easily recognizable, super liquid, easy to move, easy for sellers to be able to sell. So it just makes a lot of sense to be focused on things like that. But we're seeing that growth across Pokemon on the higher end stuff. And I think that will continue. Despite my own personal bullishness on One Piece, obviously I'm a big Pokemon investor as well. And One Piece will not dethrone Pokemon. Nothing will dethrone Pokemon. It will always be the king of this space. And so when you're looking at making sure you personally are invested in areas that are going to be the best performers for you and what you can take on in terms of information, Pokemon is going to be up there for the vast majority of people. One Piece is something that will have its own independent growth and something that will, move it through those CCG rankings, but Pokemon is still and will always be the king in that regard. So I wanted to cover off today, like I said, this emotive language use, this fact that people keep on talking about crashes and bubbles and things that are, not necessarily true or not true to the current market conditions that we find ourselves in. When we're talking with these big words, we really expect to see some substance behind their use. And that really isn't the case right now. We've got perfectly natural corrections on certain sub areas of One Piece. We've got areas of Pokemon that are producing outsized returns in terms of what we're seeing from sales. The space overall still looks very healthy, but I will pull back to that very first video. And in that very first video, covered the impact of risk markets. For now, risk markets over the weekend, stable. Everything's okay on that side. And it's not going to be a quick turnaround. It's not going to be something where we snap our fingers and suddenly risk markets are down a huge amount and we see then the impact on the collectibles market. As of right now, that correction could take a long time. It could still take weeks and months. So all we know today is that we stay in our lane. We continue to focus on what our own individual investment criteria is for this space. And we appreciate that the language being used online isn't the reality of what's happening in these markets. When you hold on to these markets, when you have long-term time horizons, when you buy correctly, the returns are incredibly lucrative in this space. And anytime that people are using those words, I can promise you it's probably more opportunity than it is a time for worry and panic. So make sure you think about it in that regard as well. But appreciate you all tuning in again. Episode 2 done. On to the next one.